Today I have an update for you with regards to a stock which is Morepen Laboratories. We'll quickly go through some information. The Pharma stock is under focus, which is under 60 rupees. Currently, after reporting 118 crore net profit in Q4 FY25, the company announced a dividend of 20 uh, paisa per share after a long wait of 23 years with a market cap of 3,287 crores. Company's share is down by 40% from its 52-week high of 100 rupees. Reported a revenue growth of 7.2% from 1,690 crores to 1,812 crores from F4 FY24 to FY25. Year on year, about 10% surge from 423 crores to 466 crores, and on a quarter on quarter basis, 2.87% from 453 to 466 crores. So, in terms of profitability, highest ever net profit of 118 crores in FY25, up by 21% compared to 97 crores in FY24. Year on year basis, net profit declined by 31% from Q4 FY25 from 29 crores to 20 crores this quarter. So additionally declined by about 26%. 26% declined from 27 crores to 20 crores. In Q3 it was 27 crores and Q4 FY25 it's down to 20 crores. A dividend has been announced of 20 paisa per share on the face value of 2 rupees subject to approval from its board members after a long wait of 23 years. Segment highlights I will not really cover it. You can go through the details from the post. Morepen Laboratories manufactures pharmaceuticals such as APIs, health devices, OTC products in India and overseas, providing aid for diseases such as allergy, diabetes, hypertension, diagnostic products such as thermometers and glucometers. Dr. Morepen's portfolio consists of products fever, pain, acidity, and overall well-being. An important disclaimer before we go through the financial and some other information: all investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, rating agencies. They do not reflect personal opinion or advice. Stock market investments carry risk of inherent and financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author is not responsible for any losses resulting from the decisions made on this article. It is strongly recommended you consult a qualified financial advisor before making any investment decisions. So this is the logo of the company. Current price of 60 rupees. You can see up about 1.23% in the last 5 days. 15% 15% gain in the last 1 month, 20% negative return over the last 6 months, and 30% good return overall in the last 1 year. So, whatever market corrections that happened in October, November last year, those impacted the overall price growth or value growth of the company, and this 29 or 30% growth would have been much bigger and higher, but let us hope that the company is able to maintain this kind of performance quarter on quarter, which will ultimately lead the company to add value to the price as well as, and if it's able to gain market share and growth, that will also help overall in the value addition over a long period of time. But it's important you consult a broker so that they can give you the best and expert advice there. Stock may face volatility due to ownership structure. Stock is at a premium valuation. Company can improve the use of its assets. The company could improve its asset employment. Price to book value of 2.78, face value 2 rupees, book value 21 rupees 56 paise, debt of 28 crores, cash of 50 crores, promoter holding only 35%, earnings per share 1.85 over the last 12 months, return on equity 13%, sales growth 15%, profit growth 140%. These are the brands that the company offers: Burnall, Forever Young, Lomolate, FiberX, Quick Check, Extra, Each Wheat, Too Cool Hair Oil. And these are the comparisons with the peers in the industry. You have ranging from 2,700 crore market cap to 3,700 crore market cap. You have price as well as comparisons here with the price to book value. You can see some companies have a price to book value of 10, 14, 6, 9, some are low as 2.47 and low as 0.82. In price to earnings ratio, you have a low of 19 to a high of about 453, which again suggests that the company may not be profitable enough to command the price that it is being currently sold at. Then most important here is return on capital employed. Gujarat Thimis Biosin 45%, which is the best. RPG Life Sciences 35%. Advanced Enzyme 24%. So these are the companies that you can consider based on their performance. Then public holdings showing here 60%, which is huge. So the company would be highly volatile in terms of price as well as volume. Any negative sentiment could drive the price down very easily, and the company would end up in the oversold zone as well. People would be looking to sell in bulk when the price is falling. So this is something that is not a very good factor to be part of your portfolio. However, as I suggested, you could consult a financial stockbroker. So the performance in the future what would determine how the company performs. If it does well, if it is able to generate good revenue and profit growth, then you will see price stability will come in. You will see direct institutional investors and foreign institutional investors also getting attracted towards this stock, and overall the public holding would then start reducing when FIs and DIs enter this stock. So engaged in the business of manufacturing, product, producing, developing, marketing a wide range of active pharmaceutical ingredients branded as generic formulations and also home health products. Market cap of 3,300 crores, current price of 60 rupees, high of 101, low of 41, stock P 28, book value 21, return on equity 12, face value 2, stock is trading at 2.85 times its book value, low return on equity of 10%. In the last 3 years, dividend payout has been low, 3.09% of the profits over the last 3 years. Then you can compare the peers in the industry. So we have Sun Pharma, Cipla, those are all very big names and huge brand of portfolio. I mean, huge range of portfolio, and also in terms of market cap, size is huge. Morepen Labs is a very small component of the market. Then again, this is important where the companies stand in comparison to what is the return on equity offered. So Cipla 23, Mankind Pharma 24.5, Dr. Reddy's 23, Judas Life Science 22. So you have more attractive companies with probably better valuations and better price as well. May not be better in price, but at least more stable in terms of revenue growth and profit capability, since they have a wide range of formulations that they export to various countries. Then you can see here sales have been more or less consistent over the last 4 quarters. Net profit has dropped However, the consistency in the overall profit for the year is what is going to keep the uh, public interested in this stock, and what is the future trend expected from the company that is going to be like the trend that is going to dictate whether the price would go up in terms of valuation or it is going to correct further. Here again, you see sales compared to year on year. There has been some improvement over the last 3 4 years. Same goes with the profitability, which had dropped in 20 FY23. It has managed to pick up and pass the uh, FY22 net profit result. And sales growth 7%, profit growth 23%. Stock price growth 30% in the last 1 year, and return on equity 12% so far. One of the best years in the last 4 years. And equity, you can see reserves are increasing, borrowings have increased as well, overall liabilities have gone up as well. So something that the company would need to keep in mind, the higher the liabilities and the borrowings, it could end up paying more interest because the capital amount is low, reserves are small compared to the other big pharma companies. So it would impact the overall profitability if company works on borrowed money. That would make it more difficult to obtain good results. So these are some of the ratios. A better improvement in debtor days. Inventory has gone up slightly. Days payable it's gone up as well, which means that the company is taking longer to pay its suppliers and creditors. Cash conversion cycle has improved by about 20%, which is a good sign. Working capital days have also gone up. Again, this is impacting or creating a negative sentiment in the market between people. So, friends, thank you for watching. Please share this video with your friends, family, and associates so they could benefit from the video. Please do not forget to comment and let me know on how we can actually improve the content of this video and the presentation. If there's anything else like you would like me to work on or some other kind of information that you would like me to present to you all, please do let me know by dropping a comment below the video. I'll look into it and work towards making it more better in variety. So thank you very much for watching.